The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss crypto markets is Octavio Marenzi, founder and CEO of Opimas. Welcome, Octavio.
Thank you so much.
So, I mean, we talk, FTX and sort of market meltdowns a lot at the moment this past week, but you've actually got to take on inflation. So let's sort of shift the topic a little bit and start with that. Signs of it easing, but obviously, not exactly down to where central banks would like it to be. What are your expectations on this trend? Is this going to help crypto markets in the short or medium term?
Well, I think in general, what will help crypto markets is if inflation comes down quite markedly and the central banks start to say, okay, we can lower interest rates again, and we can start to basically pour liquidity into the markets, which did a great deed for Bitcoin over the past few years, as just a sort of a tidal wave of liquidity came in at it and drove prices up. It drove prices up all over the place. So I think that's what's going to be positive for Bitcoin and other cryptocurrencies if we start to see interest rates go back down. I don't think that's going to happen anytime soon, though. So I think this latest reading of 7.7% inflation is basically in the noise. We're still hovering around 8%, give or take 0.5%. I don't see that changing anytime soon. I think there's a few factors will drive that up. So I don't see any relief on the horizon anytime soon from the central banks.
Now, if you look at the chart there, Octavio, I mean, Bitcoin, obviously, we came off pretty hard in the wake of the unraveling of crypto exchange FTX, down about 13% of the past 10 days. But it's stabilized a little bit of late and not a lot of reaction to the big news yesterday of Genesis. What does that tell you? I mean, are we at a bottom? Or is there more to come? What's your take on where it goes?
Well, I feel when you have sort of such a severe downturn, some people can hang on for some time and then they basically suddenly implode and disappeared as they find that things equivalent to runs on the banks or margin calls just overwhelm them and people start to remove their money. So the real question for me in this FTX debacle is who's actually going to stand to benefit in this? And I would have said that basically those people providing some sort of custody services, custodial service or technology around that would benefit. And as this really unravels, I think the real beneficiaries are going to be people who have very, very big names and very, very large balance sheets. And I'm thinking of people like Fidelity and Boney Mellon, people of that sort, with their custody services. I fear that someone like a Coinbase, who also provides custodial services, is simply not large enough to gain the faith and trust of very large asset managers and traders who are looking to be active in this space. So I think institutional investors are going to be scared away by all this for some time, for some months to come, and maybe some time. They're going to be very, very careful about the contracts they sign and what they feel their custodian or the person holding their Bitcoin is doing with it. And I think that speaks to the favor of people like Boney Mellon and Fidelity.
Octavio, we see over the past few years was the rise of leverage in this market, and that was one of the big businesses of FTX. It's one of the big businesses of all these players, and it was part of in many ways, the UST Luna story was leverage. All of this, in the end, came down to leverage. Over time, a lot of people obviously have seen the negative effects of this, everything collapsing. What makes you think that going forward, there will be any interest in this kind of liquidity in the markets, that there will be all this leverage coming back? Do you think that will happen at all? Or is the story of leverage in crypto markets basically dead, or at least muted for the next few years?
Well, I think investors are going to be very, very cautious about this now, especially sort of hidden leverage, if you will. So I think the story with FTX was basically there was a lot of leverage behind that, but the people who held the funds and assets or owned them didn't even know about it. So I think that is not going to come back anytime soon. That kind of extreme leverage, or basically you're taking on that much debt to trade, for some hedge funds and people like that, that's going to be interesting, and they're going to carry on doing that. But I think for the broad array of typical sort of long only or long short asset managers and retail investors, that's not going to be that exciting, and they're going to steer very, very much clear from that. And they're going to want to know exactly what happens to my assets when you're holding on to them. Do you lend them out? Do you are you fully reserved? Are you not fully reserved? What I find interesting about this whole space is that at the moment we're sort of reliving the lessons that the traditional banking sector has learned over decades and even centuries, to basically come up with sort of a structure that where you have separations between exchanges and custodians and broker dealers and asset managers, and you have have central clearing houses and you have central securities depositories and things of that sort. And it turns out there's a reason for all those things. There's a reason these things are separated. And sometimes people don't really understand why we have these things. They've just grown up over decades and they've always been there. We never really questioned them. And in the crypto world, I think there was this sense that we don't need all that stuff. It's all going to disappear. I remember a few years ago, people were saying we don't need exchanges, we don't need custodians, we don't need this, that, or the other. All these things will just happen in the center of the universe somewhere, and it will cost nothing and be absolutely frictionless. And what we're learning now rather brutally is that all these institutions and these separations do have a reason, and they're not there for nothing.
Octavio, let's just turn for a moment to institutional investment. So, in 2021, which now feels like, I don't know, lifetime ago, institutional investors were very much at the core of the bull market, right? And what's your outlook for institutional investors? I mean, are they going to just be completely scared away because of this? Or, I mean, where do you see that going?
Well, I think there's a certain kind of institutional investor. So we're talking about a whole bunch of hedge funds who plowed into the crypto space and basically revolve around that area. And they've taken on very, very heavy losses. I know very few of them who are actually making any money in this environment or have over the course of the past year. So they're just perforce going to reduce their transaction volumes because they've got fewer assets to basically invest and carry on looking there. I think the bigger question is sort of your traditional asset managers who've been always sort of eyeing crypto a bit quizzically and saying, do we get into this and do we not get into this, and sort of just a few months ago sort of basically started to think, yeah, we should start to allocate a bit of our assets towards crypto and get involved in those markets and see if we can make any money there and do some investments there. I think they're going to be scared away now for at least a year or half a year to a year while they sort of get their sort of minds around what really happened there and how they defend themselves against that in the future. So that much larger pool of potential investors, sort of the traditional asset managers, the mutual funds, the exchange traded funds, things of that sort, are basically going to be scared away for this for some time to come. And very, very few of them have any allocation to crypto at all. And I don't think that's going to change until they really have some confidence in terms of how the infrastructure works and how the piping and plumbing actually is put into place.